Hold on to your hats, folks, because I'm about to drop a truth bomb. A staggering 80% of new investors lose money in their first year. Yes, you heard that right, 80%. That's a huge number, and it might sound discouraging. But don't let it scare you off just yet. It's a jungle out there, and the stock market can be a ruthless beast if you're not prepared. The volatility, the unpredictability, it can all seem overwhelming. Now, I'm not telling you this to scare you off. Quite the opposite, actually. I want to prepare you for the journey ahead. I want you to go in with your eyes wide open, armed with the knowledge and strategies you need to beat the odds. Education and preparation are your best allies, because here's the thing. Investing in the stock market is crucial for building long-term wealth and achieving financial freedom. It's not just for the wealthy or the financial experts. It's how ordinary people like you and me can grow our money over time and secure our financial futures. Imagine being able to provide for your family, retire comfortably, or even pursue your dreams. But it's not a get-rich-quick scheme. It requires dedication, a long-term perspective, and a willingness to learn. It takes time, patience, and a solid understanding of the fundamentals. You need to be ready to put in the work and stay the course, even when things get tough. So buckle up, because we're about to dive deep into the world of stock market investing for beginners. Get ready to embark on a journey that could change your financial future forever. Let's face it, nobody wants to work their tails off forever. The daily grind can be exhausting, and it's easy to feel like you're stuck in a never-ending cycle of work, bills, and responsibilities. But what if there was a way out? We all dream of a day when we have the financial freedom to pursue our passions, travel the world, or simply enjoy a comfortable retirement. Imagine waking up to the sound of waves crashing on a beach, or exploring new cultures without worrying about your bank account. And that, my friends, is where the stock market comes in. It's a dynamic and ever-evolving platform that offers countless opportunities for growth and wealth creation. Think of it as your ticket to financial independence. Just like a golden ticket, it holds the promise of a brighter, more secure future. By investing in companies you believe in, you're essentially becoming a part owner, sharing in their profits and growth. This means you have a stake in their success, and as they grow, so does your investment. Over time, those returns can compound, turning even small investments into significant wealth. It's like planting a seed and watching it grow into a mighty tree, providing shade and fruit for years to come. The stock market is a powerful engine for wealth creation, but it's not without its risks. Market fluctuations, economic downturns, and unexpected events can all impact your investments. That's why it's crucial to approach it with a healthy dose of caution and a solid understanding of the basics. Educate yourself, stay informed, and never invest more than you can afford to lose. We'll explore those basics in the coming sections, but for now, just remember this. The stock market is not a casino. It's not about luck. It's about strategy, research, and making informed decisions. It's a platform for long-term growth and financial security, but only if you approach it strategically. With the right mindset and tools, you can navigate the market and build a future where financial freedom is not just a dream, but a reality. Now let's talk about those pesky pitfalls that trip up so many new investors. These are the common mistakes that can turn your investment dreams into nightmares if you're not careful. Forewarned is forearmed, as they say, so let's dive right in and make sure you don't become just another statistic in the world of investing. First, lack of knowledge. It's like trying to fly a plane without taking any lessons. You wouldn't do that, would you? Yet many people jump into investing without understanding the basics. The same goes for investing. Educate yourself on the basics before you even think about buying your first stock. Read books, take courses, and follow reputable financial news sources. Second, fear and greed. These two emotions can wreak havoc on your portfolio. Fear can make you sell at the worst possible time, while greed can make you buy at the peak. Don't let fear paralyze you into inaction, and don't let greed drive you to make rash decisions. Stick to your plan and invest for the long haul. Remember, investing is a marathon, not a sprint. Third, information overload. The internet is a double-edged sword. While it provides a wealth of information, it can also be overwhelming. Too much information can lead to analysis paralysis. Focus on reputable sources and don't get bogged down in the noise. Quality over quantity is key when it comes to financial information. And finally, trying to time the market. Unless you have a crystal ball, forget about it. Market timing is a fool's errand. Even the pros can't predict short-term market movements with any consistency. The market is unpredictable, and trying to time it can lead to significant losses. Focus on what you can control, your investment strategy, and your time horizon. A well-thought-out plan and patience are your best allies in the world of investing. Now that we've covered the don'ts, let's move on to the do's. And for beginners, there's no better place to start than with index funds. Think of index funds like the easy button of investing. They're like baskets of stocks that track a specific market index, such as the S&P 500. When you invest in an index fund, you're essentially buying a tiny piece of all the companies in that index. This diversification is key. It spreads your risk across a wide range of companies, reducing the impact of any single stock on your overall portfolio. Plus, index funds are incredibly low cost and tax efficient, making them ideal for long-term investors. So, if you're just starting out, consider making index funds the cornerstone of your portfolio. They're a simple, effective way to gain exposure to the stock market without the hassle of picking individual stocks. Section 5, ETFs and robo-advisors, diversification made easy. Now let's talk about ETFs and robo-advisors, two other great options for beginners. ETFs, or exchange-traded funds, are similar to index funds in that they offer instant diversification. However, they trade on stock exchanges like individual stocks, giving you more flexibility. You can find ETFs that track a wide range of asset classes, from bonds to commodities to real estate. Robo-advisors, on the other hand, are automated investment platforms that build and manage your portfolio for you. They use algorithms to create a diversified portfolio based on your risk tolerance and financial goals. Both ETFs and robo-advisors can be excellent choices for beginners who want a hands-off approach to investing. They offer diversification, convenience, and typically lower fees than traditional financial advisors. Section 6. Sarah's success story, from beginner to savvy investor. Meet Sarah, a 28-year-old marketing professional who was clueless about investing just a few years ago. She was intimidated by the stock market and didn't know where to begin. But Sarah was determined to take control of her finances and build a brighter future. She started by educating herself, reading books and articles about investing. She also attended webinars and sought advice from trusted financial experts. Armed with knowledge, Sarah decided to dip her toes into the market by investing in a low-cost S&P 500 index fund. She started small, contributing a portion of her paycheck every month. Fast forward a few years, and Sarah's portfolio has grown significantly. She's no longer intimidated by the market. She embraces it as a tool for building wealth. Sarah's story is a testament to the power of education, patience, and a sound investment strategy. Section 7. Key takeaways, your roadmap to stock market success. All right, folks, let's recap the key takeaways from our journey into the world of stock market investing for beginners. First, investing is crucial. The stock market is your ticket to financial freedom, offering the potential for long-term growth and wealth creation. Second, education is key. Don't be a statistic. Arm yourself with knowledge before you invest a single dime. Third, start simple. Index funds, ETFs, and robo-advisors are great options for beginners, offering diversification and convenience. Fourth, think long-term. The stock market is a marathon, not a sprint. Stay focused on your long-term goals and don't get caught up in short-term fluctuations. Lastly, patience is a virtue. Building wealth takes time. Be patient, stay the course, and let the power of compounding work its magic. Section 8. Join the conversation. Share your investing journey. Now it's your turn. I want to hear from you. What are your biggest challenges when it comes to investing? What questions do you have? Share your thoughts, experiences, and insights in the comments below. Let's learn from each other and build a community of empowered investors. Remember, you don't have to navigate this journey alone. We're all in this together. Section 9. Disclaimer: investing involves risk. Remember, folks, I'm just a TV personality, not a financial advisor. The information provided in this essay is for general knowledge and entertainment purposes only and does not constitute professional financial advice. Investing involves risk, and you could lose money. Always consult with a qualified financial advisor before making any investment decisions.